Good morning, everyone. I hope you're having a wonderful weekend. This is Andy Tuttle here with the Tuttle Group at Fairway Mortgage with your weekly DFW mortgage market update. Again, we do this every week just so you know what's happening in the market, what may happen next week, how that affects rates, and how that may impact you when you're out there looking to buy or sell a home. So right now, we had a lot going on this last week. We had the Fed meeting, we had the jobless report, the jobless claims came out, initial jobless claims came out as well. We had a lot of talk. We had the stock market rally and finally take a breather near the end of the week, and we had bonds really fight for their position. So let's talk about a couple of things first. The Fed, the meeting happened. Like we said last week, we did not expect them to hike the Fed funds rate this week, which they did not. They did say that they will do that and start tapering relatively soon, which means most likely the September hike, like we've been saying. It is on the table for them to do a hike in December as well, but most likely that'll be next year with some of the jobs reports coming out, and the economic indicators are showing maybe it's not as quite as a robust market, and there may not be the need to do that in December. We'll keep you posted on that, but just know that for now, the Fed funds rate will probably be hiked in September. It was not done at the meeting this week. We also had GDP come out. It was revised lower for Q1. For Q2, it was a little bit up. If you average it together for the first 6 months of the year, we're at about 1.9% growth. Not fantastic growth by any means. It's a little slower growth than I think they'd like, which is another reason the bond markets reacted well this week to some of the other news. So let's take a look at the charts real quick, because on this, we had by the way, I forgot, we also had some of the initial jobless claims that came out, and it showed the 244,000 jobless claims, which was up from last month by about 10,000, but still the 125th week in a row that we're under 300,000 jobless claims. So that's good. First, the best in 30 years, or 47 years, excuse me. Now, with the market, this is a price chart. The higher the price, the lower the rates. The lower the price, the higher the rates. So you can see here, this week we had a very volatile week. We started the week up here, and then we had the prices actually fall dramatically. The next day, they rallied on the Fed. This is Wednesday, so they rallied on the Fed meeting. That was actually some good news, and then they've held their ground so far this week and actually had a good day on Friday. So we're still in the trading range where we were last week, where rates are up about 0.5% from this time last year. But if you've gotten pre-approved really any time in early July, rates are at the same or better than when you got pre-approved. If you got pre-approved any time in June, rates may be slightly worse or the same. So you're in a good range right now. There's a lot of news coming out next week, so we're carefully floating right now. If you just got a contract in, we're going to be cautiously floating to the day going into next week. Of course, if anything changes, we'll get back with you. Remember, we're here to help you with your offers when you're making offers. If you've got questions about what you need to do to make sure you're in the best position to buy, we're here for you as that as well. Have a wonderful weekend. Thanks for the trust, and we'll talk to you soon.